Good day, fellow investors. Amazon is definitely a great business, but let's check what kind of an investment it is now going into 2024. We have discussed Amazon a year ago, where the risk and reward was very positive, but the stock price was around 90, and I told you it was a good buy. However, things have changed now, and we can see this, that Amazon stock over the last year, or since I made that video, is up 62%. The market capitalization now is 1.52 trillion, and the P ratio is 77. Of course, we can't take that into account because Amazon isn't focused on net income yet, but in general, Amazon stock is following the path of the magnificent 7 of the S&P 500 that have totally outperformed anything else over the last 12 months. I'm just doing now the magnificent 7, but then I'll do videos on the other S&P 500 positions, and then we'll check if there is some value. Subscribe for that. But let's discuss the business, the growth there, and the risk and reward. If we look at the financial results, nothing wrong with Amazon. Great sales, up 13% year on year for the last quarter, up 10% year over year for the trailing 12 months. And the key when it comes to Amazon is the growth going forward. I would say that with recessions, with issues, with this, with that, Amazon will likely grow 7 to 10% going forward per year. If we look at the projections, we are now at around 500 billion in revenues, 570 billion, and the consensus is that over the next 6 years, those will almost double. So that is 10%, 11% growth. But always keep in mind, these are linear projections. Usually it goes like this, then we have a blip, and then we go forward. So I would say not 1 trillion in revenue, but perhaps more realistic 800 billion. But still, growth is there because there is a great business. Now, revenue growth, okay, let's discuss profitability. Net income, they have started to focus a little bit on that, or the great times make Amazon have good money. Net income is to 20 billion, free cash flow is 21 billion. Their goal is to optimize free cash flows going forward. There is also something very important. Over the last year, the number of shares went up 2%. They will efficiently manage dilution, which means they will buy back 2% of the company every year. That is another cost. So yes, the company can grow 8%, but if they spend 2% to compensate management, the 8% is not 8% for you as a shareholder, but 6%. That's very important to keep in mind because it changes the valuation over the long term. And they keep investing 50 billion per year, a little bit slowing down, but okay, free cash flow is still great, so they could make much more money. So we have a great business that has currently had great times the last few years, but let's discuss the risk and reward of investing. I think that over the long term, Amazon could have a business model that gives net 5% of its revenues as distributions to shareholders as value creation over time. And I think that is a number that few would argue with, after repurchasing 2% of shares every year, etc., etc. So if we calculate 5% on the current revenue, that's approximately 25, a little bit more, billion. And they have done some repurchases, 6 billion in 2022, stopped in 2023. But if we look at the 25 billion now on the market cap, the 50 billion likely if business doubles in 7 years, compared to the market cap, we are now at a P ratio of 60, but 30 in 7 years. And if the P ratio is 30 in 7 years, people still expect that Amazon will be growing going forward. If it doesn't grow as fast as now, then we have a situation where the P ratio can be 20. And if the P ratio is 20 on 30 billion in value creation, That's a market cap of 700 billion. Call me crazy, but that was the situation just a year ago compared to the exuberance now. So we weren't far away when I told you that it was a good and risk and reward purchase. To conclude, Amazon is a great business. If you want to own such a business in your portfolio, I don't think it is a bad thing to own. In case of a recessions of this or that, because now are great times and the stock goes lower, you must be prepared to add more of that great business to your portfolio. If that is your strategy, I don't think there's nothing wrong with it, and over the long term you will do okay. For just value investors, I think that when the market cap is 1 trillion or lower, there is value in the ecosystem, which makes it a good risk and reward buy, as it was a year ago. Now it's simply too risky despite being a great business. Thanks for watching. Check my buys here on my research platform. I'll see you in the next video.